Good afternoon, traders. Today is May 18th, 2020, and we are just going to go over some trade reviews and where the SPY is at. So this is a trade we put on Friday before the close. We actually put it on earlier. I don't know the exact time, but I could check for you. And why did we put this trade on? That's first, is the why. So what we saw is we were in a squeeze. That's what the black dot means. And we basically, on Thursday, we reverted back to the mean, which is the 21 EMA, tested it, and held above it. We broke the flag on Friday, as you could see, the flag break, which is here. We bought the 100 calls for this week. And then today, we opened up, obviously the whole market gapped up, but the squeeze is now still in squeeze, and momentum's gaining on the stock. So we closed above our first target, which would be the 97.25, which is the high here. We actually got to our target price, first target price of 105. We got above it, and we rolled the 100 calls today. We sold them for 177% profit, and we are now in the 105 calls. So what we did there is take risk off the table. We put money in our pockets, and we're still in the trade to let this fire off and get to our target, which I think we have room to the 102 to 105 area, considering the squeeze hasn't fired, and we also have a weekly and 4-day squeeze. The 4-day did fire, but the weekly hasn't fired yet, so this could be the week it fires. And our other reason for entering the trade, just to show you on a lower time frame, is I'm gonna have to lower the screen here so you guys could see it. So it's probably better on the 195. Trying to get you one where you could see it, which will make it easier. Try the hourly. Here you go. So on the hourly, you had a momentum shift, which leads to a slingshot. Got us into, this is where we got in when we saw the squeeze. So momentum shift, see the momentum, the downward momentum started shifting upwards. We got into a squeeze, we entered here, and then we rode it, and we got rewarded today. And we're still in the trade because we're playing a bigger, this was our entry, so this led to our entry, the hourly. That's why we got in the trade. Okay, or that was our entry. The reason we got into the trade was because of the reversion to the mean on the daily, with it still being on a squeeze. So that usually means we take the next leg up. And here is, just so you guys can see, this is the thread. This was from Friday. I don't know why the date isn't up there, but this was from Friday. Bought next week's 100 calls for $1.80. It's on a daily squeeze. It bounced off the mean. High short interest. It has like 38% short interest. Target 104, which is in between that 101, 105 area I showed you. This is a swing, which meant we were holding it over the weekend. And then here was our updates today, this morning. Rolled to the 105s. I alerted everybody on Twitter when we reached 101. And then what happened was we sold 100 calls for 177%, and we rolled to the 105s. And now we're still in the 105s. And we'll be holding those at least tomorrow, possibly longer. It depends when we hit the target or if we lose momentum. Now we will open up a little extended, so I do expect a little pullback. I'd like us to hold a close tomorrow above this 97.25 too. But this is also a high short interest stock that can do its own thing. So that's why I liked Carvana, CVNA. The next trade we put on was Marriott. And we put that one on today. Also alerted through Twitter. And soon we'll have live alerts through Discord for anyone that's interested. Let me show you why we put on this trade. This is the chart I want hourly. Okay, here's the last time it had a gap up like it did today and got outside its 3 ATR channel. That means average true range. Okay, this is the 21, which is the mean. We're way above it, but we're way out of the whole channel in general, period. So the last time it did that, it happened to come back. It happened to gap down and come straight back to the mean. I'm not looking for that to happen necessarily tomorrow, but throughout the week, I am looking for a reversion back to the mean. I expect us to at least get back into the channel, which will be a quick 3-4 points in this range, probably tomorrow. They could push the SPY one more day, which would keep this up in this zone. Our exit would be a 50% stop on this. We paid $1.55 for those. That was also alerted on Twitter. Let me see if I can find that one for you. There we go. Way to go. There we go. This was 1 hour ago. Marriott buying a starter half size. So I bought half my normal size, $1.55. We'll add into close if it stays in the range, which it did. It stayed in the range, so I went full size. Or if it starts dropping. So you're in the range, which it did stay in. Or if it starts dropping. Now, if it starts dropping, those will be more expensive. But it'll also confirm what we're looking for. So sometimes paying more means it's confirming what you're looking for. Target is to get back into an hourly ATR channel. And that is what I just showed you guys. So that's a review of that trade entry that we did today. And we took next week's. The reason we took next week's, we don't have to worry about theta decay. It will not kick in until Friday, maybe a little Thursday. I don't expect us to be in this trade that long. And so we took theta out of the equation, and we're looking to gain that delta, that positive delta, and possibly, we'll probably get back down to 85 midweek, open by Wednesday. Obviously, if tomorrow's a strong day, it will be closer to Thursday. Now, another thing we should look at, why didn't we take the SPY tomorrow? Because we were talking about it, because it was extended to the upside. And a better way to show you this is on this chart. And it showed one of my exact signals. So tomorrow the SPY is going to open up extended. That's the 5 EMA, okay? We're extended off of it. Look, if you go back in time, extended, pull back. Extended, pull back and touch it. Either this has to come up or this has to come down. In this case, where we are right now, this is going to come up a little bit, but this also has to come down to flatten that out. And that's just the natural ebbs and flows of the market. See? Extended, come back, and we can go back in time. But the reason we did not put that trade on is because this was awfully strong. So Marriott is a single stock in a sector that's really affected by COVID right now. SPY has many more stocks in it that could keep it up. We have Home Depot earnings tomorrow. We have Walmart. So if those earnings are good or not as bad as they might be expected to be, or they say anything positive, which those two stocks should be strong, then we could see the SPY push, which would have no effect on Marriott because there could be negative news on travel, which is every other day. So what are we looking at the SPY? I think the SPY is coming here. I'm going to do a 200-day test, which is a major institution level. That's a huge test. So that was another reason I didn't want to put it on. You have the 200-day here. You have the 100-day here. Those are what I call magnets. Now, we did give up a little bit towards the close, so maybe we'll get what they call turnaround Tuesday and get a little pullback. I'm thinking more that we go up. If Home Depot and Walmart's earnings are good, we blast through this 100-day. We test the 200-day, and that's a major test over there, and then we get our pullback. So that's what I'm looking at, but since we didn't know, we didn't have clear direction, we did not take a trade on the SPY. And just so everyone knows, the action plan did not go out yesterday because Constant Contact was having issues. It's actually good it didn't go out yesterday because with that gap up, everything would have been null and void. So I will be writing it tonight, and it will be going out tonight to all of our members. And if you're not a member, you can sign up. There's a link in the description below. All right, everyone has a good night. Thank you.